Well, hi everyone. Good morning for those late birds. Okay, so just to give you some context in case that you don't know much about these beautiful people on stage. Marcela here is one of the co-founders of the Fundraising Bootcamp. So that literally means that what she does day to day is helps startups and scale-ups prepare their strategies, pitching strategies for VC funds. Even here is the founder of a impressive growing company that is a school book example of bootstrapping. So no equity investment so far. And Bozidar, a great friend as well, has just recently started his own venture fund here in Croatia that is focused on the region. So what I would like to do is actually start with Ivan's story. Ivan, could you maybe give us a brief overview of how your company came to be and how come you made this impressive growth without any fundraising?
Yeah, so our start was really bootstrap from the beginning. We founded the company, three of us. We merely had the capital for opening the company. And from the early beginning, we actually worked on the market, providing services, trying to get some cash. So really became really cash flow obsessive. This is maybe the thing that you will typically find in a bootstrap company. You always have to think how to survive the next month. And then growing our revenues and having good results, we managed to get some small credits from the bank. We managed to come to a situation after 2 years to realize all of the, let's say, forecasts we had towards the bank. And now we managed to get 1.5 million euros of credits in Croatia for R&D, which is quite unusual. So yeah, it's not an easy process to get a credit like that, but we can go deeper if you want, or I can stop here.
Yeah, we will come back to the whole bank loan thing because I believe everyone will be interested in the story. But I wanted to ask you, given that you're surrounded by people who are focused on VC funding, could you just give us a short answer? Would you consider going forward getting a VC investment into Aestus?
Yes, of course. Like last year, we won the competition here on Shift, and it was beneficial for us also to explore the option to get VC funding also. So it's always about comparing what are your plans for the short term and long term, what kind of funding you can get from the VCs, what kind of funding you can get from the banks. And getting money from the fund is always an option, but depending on our strategy and current situation. So if we really want to grow really fast and we precisely know what we need the capital for, we would, of course, consider also VCs.
Okay, thank you, Ivan. Marcela, so what you do every day is pretty much explain to different smaller companies, right, startups and scale-ups, what it would mean for them to get a funding, what it will take for them to actually pitch themselves successfully to different VCs. Could you give us kind of let's say an overview of what it actually means for a company to get, have a successful pitch and then get that funding? How does the life of a founder primarily change once a fund is involved into the business processes?
Sure. So I would say three considerations. I'll try and go very quickly through them. So the first one, are you actually building a business that is of VC scale? Are you building a business that can be big enough and can grow quickly enough? We're talking here about 100 million revenue annually and about 1 billion valuation in 10 years. That's typically the scale of a venture business, or 50 to 100 million revenue. So that's number one. Number two, if you do decide to go the venture route, you're going to have to familiarize yourself with all of the complexity of venture capital. So you can't really go into that journey without being prepared. So you will have to learn all the lingo. You need to understand a venture capital fund. You need to understand the structure of that. You have to know what cap tables are and term sheets and dilution and liquidation preferences and all of that to actually navigate it properly on that and don't get hurt by the process. And then number three, if you do go and fundraise successfully, then everything changes. On the bright side, you're now going to have cash and you can hire the best people that you find in the market. You can have external, like third-party support from your investors. Many investors are fantastic at helping and opening doors. And then on the negative side of getting venture money, you start losing all the control of the business, and you're going to have to report to investors, you have to report to a board and manage that board, and then the decisions are going to have some interference from the investors that you have.
Thank you. You already mentioned that getting an investment also means that you're going to grow quickly, or at least you have to, right? There are certain expectations set by a fund. Maybe Bozidar, you could also join in on this. If we can just shortly discuss what actually growing quickly means in terms of getting an investment, because I feel like while I spoke to you all before the panel, sometimes there is a gap between founders' expectations and VCs' expectations in that growth.
Yeah, it's always a gap. I mean, it's always a kind of an information asymmetry between the VCs that have been through like a zillion pitches from the startups and the startup founders who are rarely experienced. I mean, yes, everybody would like to find a founder with 3 successful exits, but it really rarely happens. So usually the startup founders are relatively fresh, and as Marcela correctly pointed out, they don't have too much experience about what it takes to successfully fundraise and what are the consequences. Well, I guess about your question, it's different from industry to industry. What does the quick growth means? Yeah, especially nowadays, where we kind of in the last 5 years or so, we have been witnessing some very quick growths in crypto. Recently, we saw AI, but that balloon is slowly deflating, I think. Biotech is an interesting area, but it takes time to get your product certified. Again, from industry to industry, you know, in defense, for instance, the usual sales cycle in defense industry was 10 years. Recently, let's say 2 years, since 2 years ago, it had reduced significantly. It's because obviously of the war and in Ukraine and other conflicts. So it's hard to like pinpoint what does the proper growth means.
Marcela, would you maybe add, have you had certain situations when you, let's say some of your alumni in the fundraising bootcamp, that maybe they successfully raised a certain amount and this great venture capital, right? And it was this great also success and PR story for them, but then they might have contacted you afterwards and said, I don't know, like I didn't expect this, like how do I go about this? Like, do you have some advice? Does this happen that sometimes you also give them afterwards advice on how to go about their business with these expectations of a fund?
We tend to stay more on the funding side, so before they actually go and fundraise. After that, we put them into a community of other founders who have also been through the program, speak the same lingo, and have fundraised successfully, so they kind of help each other there. But I think the consideration, if we're talking about growth, is actually before deciding if you're going to fundraise or not. You need to look at, as we were saying, like what sort of business you're building and how big that can actually be. And if we go back to like the topic of the panel, I think you're better off bootstrapping, like Ivan is doing, versus fundraising for a business that doesn't become big enough. I think if we take some like numbers, I was looking at some data from PitchBook, the average size of a exit in Europe in the last quarter has been 25 million. So we're here talking about billion-dollar valuations, but it's not actually what happens in most cases, as Bozidar was saying. So I think there's still amazing businesses that can be built, that can be absolutely life-changing for the founders financially, and they still might not have the scale for venture. But if you look at those 25 million, let's say exit, if you bootstrap that business, at the time of exit, you end up with the money in your pocket to split between founders and team. If you fundraise, let's say you raise 7 million and then have an exit of 25 million, you're going to pay the first 7 million back to the investors for the money that they've given you. And then if you have like, let's say 1x liquidation preference, which is very standard you pay another 7 million back, and then you're left with 11 million to split between founders and teams. So 25 million versus 11 million to split. So those considerations, I think they come before deciding if you're going to fundraise or not, and what sort of business you're building, if that makes sense.
Bozidar, you mentioned how things are really changing depending on the industry, but in general, right, when it comes to expectations of funds. Your fund primarily is focused on growing companies, right? So pretty much scale-ups in different industries, right? You and I also spoke a year ago about the fact that there has been like a lot of hype and a lot of companies, or at least like really small startups recently funded. We specifically talked about fintech, and then all of a sudden in 2023, it all stopped, right? There was not that much funding. There was maybe the investments as such were bigger, but actually not a lot of companies were anymore interesting to investors. Could you maybe explain why is it that right now you saw this opportunity on the market to actually start a fund in the region that is focused on scale-ups?
Yeah, first of all, small correction. Our fund will be focused. We're not still we're still in the stealth mode. Hopefully, we'll be like in fully launched in first quarter next year. But I think our investment thesis still holds water, so to speak, because for what we've seen, our idea is to invest into the growth phase, which means Series A forward. But we'll also have an accelerator component for pre-seed and seed. But the main part of the fund will go to Croatian and regional companies that need Series A. Because what we've seen so far in the last 5 to 10 years is wherever a Croatian company reaches the stage in which they would need a Series A, which means a larger investment in our CEE terms, it's like 1 million plus, all the way to 10 million, I guess. Then there are no Croatian VC funds that could follow them. Usually the funds from abroad, either from Hungary, Austria, Czech Republic, Slovakia, come in and kind of skim the milk. So we wanted to, not necessarily to change that, but also to be the first fund to go to when you need a Series A. This, I think, still holds water regardless of the fact that the last maybe 2 years we've seen an investment winter, so to speak. It's slowly changing again because it's a cyclical industry, really, the investment is. There will always be funds for good ideas, for good startups, for good teams, that's for sure. Maybe the process will last a little bit longer. But I think it's changing slowly, and my only fear is that we will not have enough good startups, enough good companies, because the money will be there. The money is coming in more and more. It's not really trickling, it's coming in the bigger chunks. It's just the lack of good, especially in the startup, in the seed stage. We would like to see more of those.
Okay, so maybe when you officially start, you call Ivan and ask whether he'd be interested, right?
I expect that he will call me.
Yeah. Ivan, you actually had some proposals on the table, right? Some investment companies or funds were interested in your business when they saw the growth potential that you have. Yet still, you went to the bank and you got a loan for your latest R&D like the latest app that you also presented here a year ago. Could you give us your reasoning, your thought process of going to the bank, and also how the duck did you succeed?
Okay, so the reasoning. From one side, you have VC money. The risk is lower for you personally, but you're giving part of your company, so there is a potential that you're paying much more in the future. Also, you have a business partner then on the table, which you chose for the money, so you have to really carefully choose who you're working with. On the other side, you have the credit, and the credit is totally all in. So in Croatia especially, and if you're going for R&D, you're going to give them personal collaterals. If you have a house and apartment, that one is going to go to all of your company. And even if you have some cash on the side, they typically ask you, can you put that cash on a reserved account just in case? So it's really an all-in move. But on the other side, you have to evaluate the interest rate and when do you have to start paying back. you have to be really, really precise and let's say conservative on your estimation of your future revenues, because once you have to start paying the credit, if you don't have the money, cash flow is not going to come in, and if you want to kill your company quickly, fuck up with cash flow. That's the quickest way. So yeah, when you take in consideration both scenarios, we went for the credit. Okay, for us was somewhat easier because we have an in-house competence regarding getting financing from banks. So we initiated the process with the commercial bank. We were looking at Habor, but it was too much for them. And then at the end, there was a program, EU Invest. So through this program, the bank gets, let's say, 80% coverage of the credit line. So for them, it's a lower risk. And then again, you have to negotiate, and there are a lot of covenants. So little details that you have to put inside your contract and in order to manage the credit well. So we had the competence in-house. I suggest to everybody else who want to go to that way, find some good consultants to help you on the side. And then again, you have your personal reputation. It's not only your company, it's not only your business plan, but you as an individual, as an entrepreneur, if you have a good reputation and a good recognition from the bank and somebody who took credits and managed to pay them back, it makes things easier.
So how many, I'm sorry to jump in, but I'm interested, how many banks did you check before choosing the right one?
Two, actually. We did, actually three. But we went with let's say, the one we had the longest relationship.
And how long did it take?
From inception to realization, let's say, even 8 months.
Similar to fundraising, actually.
Yeah.
Okay, that sounds good. Also, earlier when we spoke about your company and how it grew, you also mentioned that besides having this competence to actually apply for a loan and do it fairly painlessly, I would say if we compared it maybe to somebody else, there are also certain competencies that you had within the company that also made it easier not to necessarily go for fundraising, right? In terms of like also the core business of yours, that you also handle financial questions fairly well. What would be maybe some of the benefits that you do recognize for our other startups and companies in fundraising that you necessarily didn't need, or at least you handle them well within your own process, but is something that you would expect from a fund?
Okay, so there was like a topic about you have to know the terminology, you have to know the logic behind the venture capital and also behind the banks. They have completely different brains and completely different attitudes. One is time, you mentioned time, so for a VC fund you have to think about the timeline they have, and they're going to push you for an exit in a certain period of time. It could be 5 years shortest if you get on the later stage, or at the beginning it could be a little bit longer. With the bank it's all about programmatic, to think how well do you project your business in the future, are you going to be able to pay back, and how do you cover the risks, and how do you speak with the commercial part of the bank and the risk part of the bank, which are also two different kinds of people. So for us, yes, having finance knowledge in-house and knowing how to cook books, no, I'm joking, how to show your business in the proper way and how to negotiate with the bank, for us it was easier to go that way. But also, as I told you at the beginning, if the logic was different and we saw an opportunity to take the money from the VCs and to create a success, we would go also that way. And it's also an option for the future.
Amazing. There was one more topic that we also discussed before the panel, and that is that sometimes certain startups don't have an option to even go for fundraising, or to give it more context, it is really difficult for them, right? So one of the things that we mentioned was that in general, all female founding startups currently make up about 2% of all invested capital or equity around the globe, which makes them actually have to go for bootstrapping. I would be interested to see what you think about it. Is anything really changing out there in this investment seen, I know that like in RC region, there are also not that many examples of all-female founder teams, but there is a rising trend in the world, thankfully. Also, another thing, if you can just like jump in and just take over whenever you feel like it from each other, there must be also certain industries for which it is harder to get also VC funding. So maybe a review on that. Marcela, if you want to start.
Sure. So talking about female founders, as you said very well, Dina, only about 2% of the global funding is going to them. It's actually 1.6 in Europe, 2% in the US. So the challenges are there. So if you're fundraising as a male founder, it's already hard enough. And then if the odds are stacked against you as a female founder, even harder. So those who fail to fundraise or don't manage to will have to just bootstrap and go for the alternative forms of funding or grants or debt or crowdfunding. Is it changing? I think we're seeing some small changes and slow movement. I think you're seeing more now some VC funds that are set up just to invest in female founders. So I think that's a positive. But if you look at the numbers, it's still a drop in the ocean, I would say. Even when the amount invested into startups is growing, the 2% doesn't seem to move. So the percentage that actually go to female founders is not moving, even if the amount is. I think what needs to happen would be for investors really to just check themselves, educate themselves, and then just try and be, pay more attention to their own bias. There's research that shows that female founders and male founders get completely different questions from investors. So that's the type of bias I'm talking about. Investors is going to be their job really to review how they approach the founders that come and pitch them, so they can stop overlooking fantastic founders with great businesses just because of their gender, really.
2% is really a devastating statistics, that's for sure. And let's face it, female founders, it's harder for them than the male founders. That's also the fact. And I think what we need, at least in Croatia, I hope and I think that the statistics are a little bit better in favor of female founders, but not that better compared with the global data. What we need is a role model. There are some great Croatian startups led by women, Ert or Matija Nakic from Farseer, yeah, exactly. Dragana Lipovac, Habig, Maya from Zuluhood. But we need one of those startups really to succeed, and we want that person, female founder, in the front row, on the forefront of all the news outlets, because this will set up a great example to all those girls out there who would like to open their own startups, who would like to start their own business, and they're afraid of in this predominantly male ecosystem. From our perspective in our fund, I will definitely try to push. If I had the two similar startups and to invest to, and I would need to choose only one, I would choose the one with a female founder, because at least that's a little thing that I could do. That would be a plus, that's for sure. And coming back to your second question about the industries that are harder to attract investments, it was definitely 2 years ago, as I mentioned, or 3 years ago, defense. Now it's changing. It's called now the dual-use technology, which means civilian use and military use. That's definitely something that's coming on the radar, obviously because of the war in Ukraine. And crypto is not too popular these days, so this is maybe not the best way to attract VC money if you're into crypto. But again, case by case.
Great. We do have still more than 5 minutes, but I do want to end with one question for all of you, and that is regarding the fact that all of you are now business owners of your own, not necessarily startups, but companies for sure. related to growth and growth strategies, what do you think was maybe the most important decision that you've made? And maybe one failure, or not necessarily a failure, but a lecture, something that you wished you had known earlier, although it might have been a great lecture in itself. Marcela, would you like to start?
Sure. I think what I would say is just hire well, hire the best people you can find. And I think you will make mistakes about hiring, but I think one that I wish I had realized earlier is that it takes a certain profile of person to succeed in a small business or in a startup, especially at the early days. Everybody has to be up for doing a bit of everything and rolling up their sleeves, and there's not a lot of, I'll stay in my lane. And I think a lot of people think startups are really sexy and, it's cool to work for a startup, but actually the reality is a lot of hard work, a lot of hours, a lot of pressure, and everybody's trying to take something off the ground. So I think hire really well, but also keep that in mind and double check if you're hiring people who actually understand the reality of a startup before you get them.
Thank you. Ivan?
Okay, so from one side is marketing and sales. Of course, you have to have the right product market fit, but on the other side, my biggest lesson was planning ahead, planning for growth, doing the architecture of your company. Even our office space is planned ahead, and it's planned in order to support the growth strategy. So yeah, if you don't prepare well, even if you manage to attract market attention, you're not going to be able to take the business in a quality way. Potentially you could, but the quality of your service is going to fall rapidly. So yeah, you have to prepare also for the good scenario.
One of the most important advices I give to the startups that I mentor, and hopefully to the startups that we will invest to, is find yourself a really good CFO as early as possible in the process. Because money is, coming out all over the place, and if you don't have anybody to control it strictly, you will run out of money sooner than you think. So CFO, I think, is the key to any startup. It doesn't necessarily need to be a person like a full-time job. Yeah, you could always hire for a part-time a good CFO, but it's a very important aspect of a startup life, a proper, great CFO person.
Thank you. Thank you so much. I would like to check now whether we have any questions from the audience. Okay, Damir here.
Hi, thank you for a wonderful presentation. My question is, how do we find or coach startups in Croatia that can reach Series A? So how do we get from where we are to the next stage?
Yeah, if we knew that, we'd be rich. I mean, yeah, Croatia is a small market, and some areas really, you cannot really run semicons from Croatia. On the other hand, we thought that you couldn't run auto industry in Croatia, and it turned out we could. So there's a number of great companies, startups under the surface that are not visible yet because they don't want to be visible really. They don't want to be in the media. And from the perspective of VCs, our job is to find these guys. Many of those are bootstrapped, by the way. And the biggest company, this elephant in the room, Infobip guys, yeah, they were bootstrapped until very late in their life. So this is really a role model for everybody when it comes to bootstrapping. If you could afford it, perfect. If you can't, then either go to the bank or go to the nearest VC and try to agree on the terms and conditions. I don't have an answer to your question really. We will see very soon if we're going to have another unicorn in Croatia besides those two.
I think one thing I would add to this is we see a lot of Croatian startups or Balkan startups, and they all tend to think not too highly of themselves often. They will think, oh, I'm just a little startup from Croatia. And actually, guys, no, you're building amazing businesses. You're super technical and have really good technical talent here. And a lot of your businesses are really fantastic. And there's this mentality that, I don't know, looking up to the UK, oh, maybe we're not building businesses that are as good or big enough. in comparison. And actually, if you look at the data, it's not true. The startups around here in the region, in comparison to startups of the same level in the UK, are hitting the same, roughly the same revenue. They have roughly the same amount of people in their team. So you guys compare really well. So just drop the mindset that, small country, maybe we're not big enough, not good enough, and just go for it. You're building good businesses, believe in that.
Awesome.
I can actually only add that even if you're from a small country, and even if your business is from the 5, let's say, key points, completely non-fundable for VCs like ours, so it's focused on the local market, the scalability stuff, and so on, it actually, the right team with the right idea can get the interest also from VCs, even if you're focused on a niche market or something like us. So don't just look at the big ones or the trend ones. If you have a good idea and you have a market which actually is ready to pay for your idea and you have a good team, you can get the funding anyway.
Great. We had another question. I think Stipe. Stipe was also one of the competitors and the winners last year here on Startup Stage.
And he's a boot camper.
Hi, yeah, Steve here from Hypify, a startup that's on the fundraising side, not the bootstrapping side. And nice that you managed to bootstrap. I'm not sure if we could have done that, a bit of a different story. But the question I had and what I see with the difference between bootstrapping and fundraising is the speed of growth. How do you think that bootstrapping has either limited or the loan that you got that has increased your speed of growth? And what do you think in the difference when you bootstrap or when you fundraise? What's the difference?
If I saw that the additional money would increase the growth, I would take the VC money. So we actually made our projections in order to keep the quality of the service good and to keep, because we are growing 100% a year, so it's not like we are idle. But the point was that we had a key idea on what we need the money for. And once we managed to get the money from the bank for everything we need, then we didn't look at the VCs anymore. But if we missed some certain amount and we saw that we could grow faster and reach a business logic afterwards, it's not just about getting the funding, but that it makes sense in 5 years, we would take the funding also.
Thank you so much. We're out of time. Bozidar, Ivan, Marcela, thank you for all the answers.